numbers. Thank you so much for joining me today on the show today, Andrew. And I'd first like to get a sense of what those key drivers for your earnings were.
The key drivers really were our investment in assets. In the last 3 years, we've invested heavily, especially in marine assets and in vehicles. Last year particularly was heavy on vehicles, so we saw some of the benefits kicking in 2019 with the revenues coming from the marine side and the fleet management side.
All right, well, let's look at what played out in your top line and bottom line numbers there.
Now, the top line, the investment in assets played out in the top line, and so we brought in some new boats. We had 3 new boats with a new contract with NLNG. And then on the fleet management side, we brought in about 400 additional vehicles for 2 main contracts, and that impacted heavily on the top line. Now, on the bottom line, we also were very aggressive on cost optimization, and so we saw some improvement in net margin figures.
Yeah, because I saw that your financing costs were up about 19% in 2019.
Yes, we took a bond of 7 billion naira in 2019, early 2019, 2018, 2019, and that impacted on because that was part of the growth, the boost for the growth that we experienced. So yes, the growth came from part of that bond fund. Yeah, and that's why you have the growth in our borrowing costs.
All right, so let's look at the operating environment in 2019. I'd like to know how that played out for you. Someone in the line of business that you're in.
Yeah, it was a tough environment. Tough in the sense that borrowing costs were very high. We had significantly high borrowing costs, and we also had some delays in payments from our prime clients. So that had a double whammy effect for us because we had borrowed heavily to buy the assets. Then we had to keep our working capital going with borrowed funds because of delays from clients. So that had an impact on us as well. But that was not just C&I, it was part of the environment. The environment itself was devoid of cash and it was difficult to operate.
But what are you expecting for 2020 in the operating environment?
Well, 2020, I don't think there will be a lot of difference between 2019 and 2020, if you ask me. I think it's just to brace up for the storm that is going to come and keep your niche markets and keep and continue the cost optimization, because everybody is now looking at how to get value for money, and so we are more concerned about how to get value for each naira we spend. So,
all right, talking about value for money, I'd like to understand the performance of each segment of your business and where are you looking for that top dollar?
Now, the way the C&I is structured, you could say we have 3 different companies in one, right? The marine business, for example, we're focused on the oil and gas industry. And last year, with the investments we made there, we expect that the growth is going to continue coming from there. This year, we are not looking to make any significant investment in that industry. We're just looking at how to improve our efficiency ratios and be more profitable in that segment. For the fleet management unit, yes, we expect some growth there because we've gotten some indication from clients on who want to refleet, who want additional vehicles. And we're putting a lot of technology behind the fleet management business as well, which is helping us to improve on efficiency. And also to come up with a different product for what clients are used to. So that's also another market that's going to open up for us. So that's one growth area we see. For the outsourcing, personnel outsourcing business, we are doing a lot with sourcing personnel for blue chip companies now. And we've just come up with a job search engine called getajobng.com, and it's running very well right now. So we see that might be a new money spinner for the business.
All right, now let's clear the air a little on that financial error that affected your Ghana subsidiary, and I'd like to understand how that you see that impacting your targets for 2020.
No, the impact was minimal and really won't affect our targets for 2020.
All right, but then what are your targets for 2020 then?
Well, we're looking to do a minimum of 10 to 15% growth in PBT. Um, with all that what I said earlier in terms of cost optimization and tweaking the revenue figures a bit, I think we should be able to deliver a growth of a minimum of 10 to 15%.
And the rights issue and also your expansion plans.
Yeah, the rights issue, which we understand is successful to a large extent, we expect that that will impact positively on our funding costs because we need to refinance some of our funding and invest it also in the marine and the fleet management business. So, yeah, that will impact on our business too.
All right, then. Any quick outlook for 2020? What can we expect from C&I Leasing?
Well, I think what we'll expect from C&I Leasing is a little more dynamism because we are coming, fleet management business, for example, we're coming up with products that were not our traditional products. These are sort of more technology-based products which are focused on the fleet management business and a lot of efficiency in terms of our deliverables to oil and gas clients. So, yeah, we expect that to happen. We might not see too much of growth in assets and all that, but we're likely to see a lot of improvement in efficiency ratios.
All right, then. Thank you so much for that guidance given today. I've been speaking to Andrew Otike-Odibi. He's the Managing Director and CEO of C&I Leasing.